Alright, what's up guys? Today I'm going to show you how to chart Bitcoin, which can help you make pretty accurate predictions in the market and help you make some money and know when to buy and sell crypto in general, because Bitcoin is the indicator for all altcoins, as I'm sure you know by now from trading this stuff. So the first thing you're going to want to do is chart the halving dates, which I pulled up here, which you can just Google those and find them. So we're going to take a vertical line and we're going to find these dates. So the first one is November 8th, 2012, which is way back here. So we want November, what is it? November 28th. Line. November 28th, 2012. Really close. It's the 27th, but you know, it's close enough. Alright, and then our next one is going to be July 9th, 2016, and I'm doing this in real time so that you guys can follow along. July 9th, 2016, and you'll see why we're doing this momentarily. That's 28th, whatever is close enough. Okay, then we're gonna, and it looks insignificant because it's so much smaller back here than it was over here, but if I zoom in, you'll see the same type of spikes even back in these moments. But alright, so then the next halving date is May 20th, 2020. So May 20th, oh my god, there we go, 2020. Okay, and then we're going to draw another one on April 19th of 2024. Okay, and then one more. Get that. One more in the future, April 17th, 2028. Well, let me go out that far. Okay, well, this is as far as we can chart it for now. Okay, so once you have the halving dates, the next thing you need to chart is how long after the halving we see the peak of the cycle. And on average, that is 75 to 80 weeks. And you will see that from me drawing a date range. So I need to zoom in a lot more to do these old ones. Alright. Zoom, zoom, zoom. Zoom, zoom, zoom. Okay. So here's the original one. Click the line. And we go to there. 368 days. Get that right? November 28th, 2012. Yeah. Okay. Again, same thing. This is the only one that breaks the cycle, and I feel like this is because nobody really knew what Bitcoin was and it wasn't adopted yet. But you'll notice this pattern once we get a little further here. So I feel like the first cycle can be discredited in almost every analysis you do. That's what I've noticed over time. But alright, so you go here and you go here. Okay. And then you go here. And we're going to go somewhere in there for now. don't know if we can change this to weeks. Is there a way to... I don't know if you can do that, but let's just do the math. So 536 divided by 7 gives us 76 weeks. Okay, let's make sure this is right. Pretty close, okay. Let's do the same thing. Be 504 divided by 7, 72 weeks. Okay, so we should be writing these down. So 72 weeks. What did I say for this one? Sorry, I forgot already. 536 divided by 7. 76 weeks. Okay. Alright. So now we want this to be conservatively between 70 and 80 weeks, right? So let's just put it at 75, which is probably pretty close to that now, I guess. 530 divided by 7. Yeah, 75. It's pretty close. I'm going to knock it back just a tad to like 520 days. Ish, right? So we're aiming for 75-ish weeks. Okay. So judging by that, right, it's never exactly the same. It's never exactly the same, but you can already see where I'm going with this. It took 72 weeks to hit the peak from the halving last time. It took 76 weeks to hit the peak from the halving the time before. And we can assume with good expectation, a good assumption. I feel like this one, I just didn't zoom in enough, maybe. Nope, that cycle definitely breaks the rules, but that was before anybody was adopting it. So anyways, it moves with the liquidity cycles as I've gone over before. But so we can start to see something there. The pattern is pretty consistent there. Then you're going to go to your indicators and you're going to add this, the pi cycle Bitcoin high-low, no credits left indicator. This is all on TradingView, it's free, okay? And for this to be accurate, you need to be on the daily time frame, the daily chart. Now check this out. This is crazy, okay? Let me zoom in more. I'll go back to 2017 to start. So look at this. Every time that the white and yellow line cross, okay? Now the white is the pi, the white, sorry. I want to make sure I get this right for you guys. Here, let me just click the thing so I don't call these wrong. Visibility, style. Okay. So the white is the high long moving average and the yellow is the high short moving average. Okay. When those intersect, that is the peak of the cycle in every single occurrence. It has never, ever been wrong. It's pretty nuts. See, I charted this one wrong back here. Alright, well, I don't want to waste your guys' time, so let's go to the ones that I did right. I missed this guy right here, so I needed to go farther back here. Anyways, we can correct that in a second. I just want to make this point. So the pi cycle top indicator, that makes me feel better because I was like, what's going on here? The pi cycle top indicator uses the high and short-term moving averages to pretty accurately predict the tops of the cycles. So if you look, these made contact right about here, right? Well, notice where the peak is. I mean, look at that. Within days, right? Okay, so you're like, that's one time. It's just one time. All right. They make contact right here. Peak came like a day or two later, almost on the day. All right. So now here you can see how they're starting to get close to each other, right? Because the price is going rapid. That moves those averages closer together. It does this using volume, demand, supply, and the time frame of the cycle. Now, you have to understand, if the cycle time frame gets broken, all of this theory goes right out the window, right? However, it's pretty unlikely that that cycle will get broken because it's based on the liquidity, and the presidential cycles are what trigger it, because every time we get a new president, they have to make all these promises, and to make the promises happen, they have to borrow money. That's why we get liquidity dumps every time there's a president. Doesn't matter who wins. That always happens. It's pretty interesting. The more you learn about this stuff, the more pissed you'll get. But anyways, you're starting to see we have quite a bit to look at here. And I don't know if there's an indicator for... Yeah, there's not. There's a few other charts you can look at, like I told you guys in a different video. So Bitcoin, MVRV. Oh, TradingView indicators. Of course it costs money. So you can look at this chart, which we're gonna bookmark this in our crypto folder. And every time that these orange lines right here, every time the Z-score gets into the red, traditionally has been a terrible time to buy. That's when your peaks happen, every single time that orange touches the red. So if you want to be safe and sell at a smart time, as soon as you get right under here, man, it's time to get out. Don't risk it, because it rapidly changes directions, as you can see. So this is a really good indicator that's always been true. You can see right here, as soon as it touched it, it reversed. And this one, we blew right through it. Blew right through it, blew right through it. This was the COVID cycle, so it was a little rushed. So that kind of makes sense, but it still did it. So this has also never failed as an indication. Really good thing you can keep track of. And then there's the stuff I showed you guys in the other videos. There's price performance cycle that you can keep track of. That helps you use historic trends to see where we could go. It's not as helpful for timing, but just to see where we are in the cycle, it's good. And then you also have the historic returns. So you can see this is helpful for altcoins because it shows you when Ethereum runs compared to Bitcoin. This can be really useful too to try and predict the altcoin market. This is just one indicator. So my point is, there's a lot of tools to keep track of this stuff. But going back here, you know, this is a beginner, or where you can start with charting Bitcoin that can just help you see when to buy and sell. I did say we'd fix this other one, so let's try to do that real quick. See, I just didn't go. Yeah, I just don't think this. Yeah, see, it goes way back here. See how that works out. So it's usually been like 536 bars or something like that, right? So let's go. Okay, what is that date? The 7th. Yeah, this is before the halving cycles even started. That's why I think just doesn't respect it, because this is like the first time it happened. So I don't know. I'll look into that a bit more. I don't know if I'm just charting that wrong or not, but you know, it's over a decade ago. So we're looking at the 3 cycles is what we're looking at, and we're looking at what liquidity's done in those cycles, and that's only been true since 08 too, so that could be part of it, because the great financial crisis kind of triggered this cycle. But anyways, so what's useful here, right, is if we think that it's going to respect the trends and the cycles, which so far it has, okay, doesn't mean it will, but so far it has, then we can literally guess how much time we have left, right? Okay, So 288 days roughly is what this is saying. Now again, you should never swear by one thing. Okay, 288 divided by 7, 41 weeks is what I'm seeing. So best case scenario with previous trends, we have roughly 41 weeks left in this cycle. Now, there's a sentiment, or there's a theory, that each cycle is getting shorter. However, this kind of disproves that theory. But as more and more people get awareness to it, then the cycle gets accelerated, which is the theory. Which, if that's true, this pie top chart indicator will probably fail. But so far, that's not what I'm seeing. Everybody keeps saying we're ahead of schedule, but I was hearing that same sentiment back here when Bitcoin hit a new high on the halving cycle. You know, I was hearing the same thing, but then we got stuck in a what the fuck, man, I'm trying to go ahead. Like a support resistance zone for a long time. Like you see this, it just sat here for, was it a year? Like 7-8 months. It just sat there. Okay. And we had a big crash in September, which corrected the time frame. Like until that September pull down, we were ahead of schedule, but then that corrected the time frame. So my point is, even though we're ahead of schedule now, that doesn't mean that we're not going to get a big correction at some point and straighten that time frame out. So, and I would not be surprised at all. I think when Trump goes into office on the 6th, that'll be a sell the news day. I think the prices, everybody expects them to rip that day, and I think they're actually going to sell off that day. That's my theory. But we'll see. I think they're going to try and pump it till then, and then we're going to get a correction that day. Everybody's going to think that's the end of the cycle, but it won't be. This is my theory. I can't prove it to you. Just been from watching this for a while, that's what I think is going to happen. So anyways, hopefully this helped a little bit and maybe gave you guys some confidence in what I'm saying. There's a few other things you can look at, which I've gone over in the other videos. The Bitcoin dominance chart, as you can see, it's falling now, that's why altcoins are running. Every time altcoins fall, or every time Bitcoin falls in dominance, altcoins pop off. So if we look at May 13th of 2021 and we go to Ethereum, May 13th of 2021, it's right here. That's literally the peak. So as Bitcoin's dominance fell to its absolute bottom, Ethereum hit its top. So that's why right here we know that altcoins are about to start taking off, and you're seeing it already, right? Like Ethereum's starting to run. Like, okay, here's Bitcoin's dominance, and then let's look at ETH at the same exact time. See that? Negative correlation completely. So you can literally take trades on altcoins based on Bitcoin's dominance. It's kind of crazy how easy that is. But yeah, and you're seeing it in all the altcoins, right? They're starting to rip. It's the same thing. It's because the money is rotating out of Bitcoin. So yeah, I hope this helped. And if anybody wants to dive deeper on the charts, we can. But this is just something really simple that you can use to get started in crypto cycles and try to understand when to buy and sell stuff. So yeah, hope that helped. Have a good one.